Hi everyone, my name is Lucian. Most of you know me from Twitter as Triangle Investor. In today's edition of CEO and Market Expert Interviews, I'm joined by Jander. Per is the director of WMC and a technical advisor for Sprott Physical Uranium Trust. Per, thank you very much for coming to my show. It is great to have you.
Thank you, Lucian. Very much happy to be here. Thanks for having me on.
Thanks. You are a known name in uranium industry, but nevertheless, I would like to ask you, like I do with all my guests who are first time in my show, that you give us your background. How did your uranium path started? When and where? And what are you doing today? Give us some background of yours.
Yeah, no, absolutely, I can. When I do this and I start adding up, so I've been in uranium for almost 20 years. That makes me sound very old, and I am. I'm guessing old. I'm guessing old, getting there. But no, it started in Sweden where I grew up. I was working for a utility that was called Sydkraft at the time, but then changed name to E.ON when it was acquired by the German utility. Working at the power station called Oskarshamn. So it's a large boiling water reactor on the east coast of Sweden. And that's really where I like on the rotational program, this management program. I did energy trading before that, and I wanted to check out the nuclear. And this was in 2003, I think. And it was just the scale of everything and how serious everybody took safety, security, and the one power station could power basically 10% of Sweden. It was absolutely amazing. So, and being slightly concerned about climate change and greenhouse gas emissions, then it's like, oh, this is actually something I wouldn't mind working with. So I worked for the utility for a couple of years and then moved to the WNA, the World Nuclear Association, focusing on sustainable development and climate issues there, but basically being a voice for the industry on some of the climate change negotiations, the UN. And from then on, I went to Cameco, which most people in uranium investments are very familiar with. Anyway, it's hard not to know about them. And I was there for about 12 years, doing a lot of marketing for utilities in Europe, Middle East, and Africa, and also handling some of the trading that we did there, because Cameco inherently is short, so they actually buy a fair bit of uranium every year, being in the market and just get a feel for things. So did that, and then I joined WMC, where I currently am, in 2019. So that's a small employee-owned company. Well, it started small anyway. We were 5 of us, but now we've grown quite a bit, and we're quite active in not just nuclear fuel, but also battery metals as well. So headquartered in Amsterdam, we have about 25, 30 employees now. So quite exciting, but commodity merchant. We're looking at developing some assets as well. But my focus is on nuclear fuel. So small portion of my job. It started out big, but now a small portion of my job is dealing with utilities still in Europe. Some of the really good relationships I have there, and but the absolute majority of my time now goes to being the technical advisor for Sprott, because when we started working with them in 2021, both Sprott and us figured out this will be a part-time job. It won't take too much of my time, but clearly, 2 years later, and gone from 600 million to 4.5 billion. It's a lot of work. It's a lot of fun, but it's a lot of work. So both buying uranium and talking to investors and just marketing efforts in general. So it's been quite a journey, but it's a very good time to be in the industry. So I'm quite happy I landed where I am at the time.
Definitely. Just for a better clarification, so the people could get the whole picture, could you tell us more about the process of buying and selling uranium? How do you buy it? How do you sell it? And what are the things you have to do in the process? How does the process looks like?
Yeah, that's an excellent question. And I would say in general, the market buying uranium is sort of, there's 2 main areas or theaters, if you will, where you buy it. Whereas one being the spot market, which is mostly transparent, but it isn't very transparent because there's no screen where you can just click and buy uranium. It is basically, it's a very old school. You bilateral discussions with people. You talk, and there are some brokers you can go with if you want to be anonymous. But other than that, there's maybe 10, 15 frequent traders, and then you have another 10, 15 entities maybe to add on. I think we counted out the amount of counterparties we have with Sprott, and it's been about 30 in the last 2 years. So I think that's anyone who trades uranium we've dealt with, more or less. But it's very much you just phone calls, emails, text messages even, and then have a conversation and try to agree on a price. And there's not a transaction every day, so there are price reporters who try to call around and try to figure out where transactions took place and where are the next ones likely to take place. So it's very much an opaque market. But then the majority of all the sort of the backbone transactions of the market are in what's called the term market, and that's where utilities talk to suppliers about longer term arrangements. Could be 5 up to 10 years, sometimes even more, for future supply. And those are much more opaque, much more non-transparent, where they sit down. It can take 6 months just to negotiate, and then another 6 months to negotiate a contract. So those are ongoing discussions, and obviously they're fairly infrequent, but also a good indicator on the activity and amount of contracting that you're seeing in the market. That definitely has picked up over the last little bit here. So it's an exciting fall in front of us. Contracting has definitely started to pick up in uranium itself.
Yeah. I had a lot of uranium guests in my show, from CEOs and all kind of market experts, but I believe that the best person to discuss the current uranium supply environment is you. I mean, as a person, uranium trader who is on the market 24/7, and you are connected to the people who are involved in the industry. So my question, Per, is how tight is the uranium market now? Is there available material on the market?
Yeah, that's again a good question. Like when we started out 2 years ago, it was easy to buy 1 million pounds in a day. That was no problem at all. There was so much overhang in the spot market. There's a big glut of uranium remnants from the bear markets in Fukushima. There was just a lot of it. You could easily find a bunch of material in the market, finance it, sell forward. So some of those carry trades took up some of that. But clearly, when the financial funds and the junior miners started buying in the spot market, that really started clearing that out. And now 2 years later, I mean, you've seen what the spot market have done over the last couple of weeks. It is extremely tight. Now, when it ran from $50 to $60, that was over a period of maybe 6 months. Fairly small volumes, but you saw utilities in there being active, that they just figured like, we'll bite the bullet on the carry cost. We just want to have the security of supply, so we'll start buying it. Now, after the WNA symposium in London in early January, the market has ran another almost 20%, from 60 to low 70s now. That has mostly been driven by investors and funds, and maybe a little bit more speculative. And it's obviously moved very, very fast. Part of the reason is that there is so little supply. It was extremely tight. You had to buy. Yeah, if you wanted to buy 300,000-400,000 pounds in a day, I don't even know if you could find it. It would take you a couple of days to start asking around. And of course, people, it's a small market, people talk. So then if they know someone is out in the market looking to buy, you might see the offer starts backing up a little bit. And so it's a bit of an art to it, a little bit of a dance. You just gotta, if you seem too keen, obviously the market just runs. So sometimes you have to wait for it to calm down a little bit and then come back to you, which is kind of what we're seeing now. But I would still say, buy more than 500,000 pounds in this market, it's going to be very, very difficult.
Yeah. So to buy, let's say, 1,000,000 pounds, which is typically one reload of one unit, that kind of transaction is not possible. Let's say it's not possible today.
If you want to buy it in the spot market, it will be very, very, very difficult. And I would say actually a reload is about 500,000 pounds, but still, no one really would buy it in the spot market. There was spot market activity for about 500,000 pounds. Someone was going through an enricher to try to get. Well, they contacted an enricher and say, hey, we need a reload's worth, and the enricher had the conversion and had the enrichment, but they needed to buy the U308. So you saw that 500,000 pounds demand in the market, and it had an immediate effect. I think the market jumped about $2, and this was for the WNA. So it's as tight as I've ever seen it.
In the next coming weeks, we could see more potential pressure on the market with RFPs coming, requests for proposal on the market, participants, utilities. I mean, will this impact the spot price also?
I mean, it certainly can. I think historically they have. Now, because that's when carry trade. That's when you have the connection between the term contract and the spot market, is that if you can find enough spot uranium, you can find someone to finance it, or if you can carry it on your own, on the balance sheet, then you can try to compete with the primary suppliers out in time. But yeah, today it's quite difficult. It was a couple of times over the summer where we tried it on our own, but it wasn't very large volumes, but we did find a little bit. But other than that connection between the spot and the term market, it's not as clear. And the term market is obviously trailing a little bit. But with the current financing rates, even a $72 spot market, and it says the term price with UX is what, $61 now. If you deliver 3-4 years out in time, well, you're already past $72 then, right? So it's even though it looks like it's backwardation, it actually isn't. So yeah, it will have the impact in the sense that there was, for example, one utility that's coming out in a month or so. They already announced that, well, we can look at taking delivery over 5 years time. Yeah. But an alternative, if you can deliver, well, about 500 tons of 1.3 million pounds to us this year or early next year, we'll take everything in the spot market and just carry it for the security of supply angle. So they are definitely willing to take a higher price today just to have the comfort of knowing that they have the pounds themselves. So, and that's something we haven't really seen before. But I think there will definitely be some utilities who consider doing that, because both big suppliers, Cameco and Kazatomprom, are claiming that they're sold out for the next couple of years, maybe even 3 years. So then, yeah, at that point, if you're a utility, you just want to make sure you get your hands on the material.
Yeah, but Per, do you believe that now after the uranium price jumped 100% in an 18 months horizon, and could potentially go even higher, of course, that we could see some bigger unexpected quantities flooding the market from, let's say, unknown sources? Is that a possible scenario?
Yeah, I would say unknown sources are very, very rare, if not almost impossible. People know, because it's not like
from the east, let's say.
Yeah, sure. I mean, obviously, you saw the announcement from Kazatomprom fairly recently, where they're ramping up. Now, for people in the industry, I don't think anyone was surprised. They would more have been surprised if they wouldn't have done it, and I think it would have been a cause for pretty grave concern if they had not ramped up. So, but Kazatomprom is such a big supplier that you have from 23 to 25 is a 25 million pound a year increase.
Yeah,
I was just discussing that with a price reporter yesterday, and of course, it sounds like a lot of material, but they also said, like, well, keep in mind, we are still going to be at a deficit despite the 25 million pounds. So, yeah, whereas it sounds very bearish, you saw obviously the reaction in the equity market took a nosedive, and everybody is like, oh, it's a very bearish outlook. It is not. It is not a bearish outlook. It is. It's like the spot market in uranium, it might come down a little just because of the recent spike here, but I would say go below 70. I don't really see it will, and there will still be a shortage over the next few years. So it won't be as bad, sure, but most of those pounds are already committed. Like Kazatomprom has already sold those. They might have a little bit available, but we also had Yellow Cake exercise their option last week. That's another 1.5 million pounds. Quite likely they will exercise it in 25 again. So yeah, those pounds, they can be eaten up pretty quickly. And considering the amount of contracting we're seeing in the coming months and years, yeah, it's not going to move the needle much. For me, it's almost more a sign of comfort that the material is going to be there. We're not going to have anyone that's going to have second thoughts about expanding a nuclear power station, extending the life of it, or even embarking on new ones because they're worried about uranium. The uranium will come, but it will be at a different price than what you have even today. It will be a higher level than today.
Okay, so you would exclude the scenario where spot market could dry up at one moment?
Yeah, I mean, it could dry up temporarily. I'm not saying it's absolutely impossible,
temporarily,
but it also, when you're a utility, you rarely ever need to buy uranium in the spot market for,
of course,
your immediate need. Sort of, when you buy uranium today, you're most likely going to put it into a reactor 2 or 3 years from now, and you have a fair bit of inventory in fuel rods on your site already, or at least in the fuel chain getting delivered. So there is never a just-in-time delivery for uranium itself, because even if it is more or less immediate, you still got to convert it, you still got to enrich it, you got to put it in a fuel rod. So yeah, you still have a couple of years. Now it's going to be a game of chicken, because if someone says, oh, $70 is too expensive, I don't want to buy uranium, I'm going to wait for it to come down, I think that's a very dangerous game to play, because first of all, you're not that sensitive to prices, and also I'm fairly confident that $70 is going to look quite good in 2024.
Yeah, you touched on utilities. Where are we now in the contracting cycle? When can we expect the peak of that contracting cycle?
I think it's picking up quite quickly. I mean, it's and the numbers are somewhat misleading. It's 117 million, 120 million. It's nowhere near replacement rate of 185, which is true. People have been walking down inventories over the last few years for sure. And at some point it needs to come up, but I think we're going to be well above 150 million this year, and this is what's being reported. Now, there is going to be a lot of material that's being transacted that you simply don't see. But the trend is there, and it's going to be a higher number this year than last year, and I'm quite sure there will be an even higher number next year. So the contracting cycle is really starting to pick up when it comes to uranium. The Russian invasion of Ukraine drove a lot of contracting and conversion and enrichment, because that's where Russia has a lot of the supply. Now that a lot of utilities have, at least they're fairly confident on that section now they're turning their interest to U3O8, because you also keep in mind that when you're going to contract for enrichment, when you sit down with the enricher, not only are you agreeing on a price, you're also agreeing on a tails assay, which means how much, basically going to translate into how much uranium do I need to buy and deliver to this enricher. Once you know that, now you know your uranium needs, then you can go to the market and buy the uranium. And the shift from these tails, 0.2 to 0.3 tails, it's a little technical, but it translates into 20% increase in demand for U3O8 for Western utilities.
Yeah. I have one hypothetical question. Let's say that you are a CEO of a uranium company that has producing assets or near-term producing assets with, let's say, 2 million a year production. Would you sign offtake agreements at the current environment with ceilings and floor terms, or even spot related, or you would wait for higher prices?
Yeah, that's a good question. I would probably want to layer it in a little, sort of take a methodology, like to go completely naked and just dump everything in the spot market. I don't think that's a great idea. If everybody was thinking the same way, it just wouldn't work, because also utilities want the certainty. I think the terms you get now compared to what you could get even certainly 2 years ago, is completely different. You don't have to offer any flexibility. The ceilings, I mean, Cameco was talking about $80 ceilings, and these are escalated, so they will be a lot higher by the time the contracts come around for delivery. And I think it's going to be higher than that today even. So I would layer in a little bit of that, but I certainly wouldn't commit more than 50%. But that's just a gut feel. It's obviously what does the ore body look like? What's your cost structure look like? All those things. And I'm not a miner, but it seems to be prudent to 25 to 50% within the next year. That would seem to be a reasonable approach.
Great and diplomatic answer, Per. Definitely.
It's the Swedish person in me. I gotta be diplomatic.
Yeah. What's your take on new physical funds coming to the market? And looks like we could get them more than one. Do you see them already lobbying on the market, trying to get a good starting position, to say?
The new funds that have come in, there's obviously two with a Swiss connection, both Zuri and PFYN. They have very different reporting requirements than Sprott, for example. So it's very hard to see exactly how active they are. Have we seen them in the market? No, not really. It doesn't mean that they haven't been in the market and bought little purchasing here and there, but we certainly haven't seen a big, large unknown factor gobble up every pound that comes to the market. So I don't think they've been buying that much yet. Now, of course, that can change, but I'm quite certain, considering how small the market is, you would see if and when that would happen. It will be interesting to keep an eye on Anu, of course, which is the Kazakh version. I think they're doing pretty well. They're raising primarily in the Middle East and Asia. So that's going to be, I think it's Q4. We're going to see an announcement from there. I mean, they talk numbers, up to $400-500 million, which would be a very large chunk of the announcement that just Kazatomprom just made, because obviously they will be more or less exclusively provided uranium by Kazatomprom. So that will be yet another one who would eat into those reserves coming out of there. But yeah, so far we haven't seen a lot. Obviously, Yellowcake's announcement last week. But as for day-to-day sort of activity in the spot market, spot tends to be by far the biggest actor there, which also means that you have a fairly good insight into what's going on there. When you're in the market on a daily basis, you just get the completely different set of information than the insight into what's going on there.
Yeah. You're a lot in contact with all the participants on the market, buyers, utilities, sellers, brokers, traders, enrichers. My question is, what are you hearing from all of them? How do they see the market, let's say in the midterm or long term? How do they see the market? Or they are just focused on the short term and fueling cycles like utilities?
No, I mean, I would say utilities are probably the ones with the longest term focus, and clearly, again, as I refer to those term contracting, where they sit down with the big long-term suppliers like Cameco or like Kazatomprom to hammer out some longer term contracts. But still, I would say traders are focused mostly on the near term, maybe midterm. Like the carry trades are not as attractive now, but they still have offtake deals, so there's still some conversations to be had with utilities. WMZ, for example, we're actually fairly active in the midterm market as well. We don't go in well into the 2030s because we simply don't have a line of sight to supply that long. But within the next 5 years, we're quite active, and you hear when you talk to the primary suppliers, not just in uranium, but obviously Urenco is a big factor because they're such a big player in enrichment and will continue to be so. I think they're not too concerned when it comes to conversion. They have a good arrangements in place for that. Orano is obviously the same. They have their own conversion supply, so they're doing quite okay for the time being. But it's more we're seeing their activity in selling SWU in a time when they don't really have much spare SWU capacity. So in order to create that SWU capacity, they need to change their production tail, which automatically translates into more uranium needs, and that we have seen a little bit, and I think it's only going to continue. So and some of these RFPs that are coming out from utilities, they are not just for uranium alone, they're also for UP or just enrichment on its own, and that will of course also have an impact on the spot market in uranium as well. So it's it is very, very tight. I would say the last month where we've seen this run in spot price, that was not so much driven by the fundamental demand from utilities, but now that the immediate sort of push from the trading/investment community has subsided, I think it's you almost have this like constant presence of utility demand that's going to sort of carry it anyway. So it might be flat for a little bit, but at some point it's going to start pushing in again. And I think we're going to see that in the next couple of weeks too. Yeah. It is so tight and there is so much activity coming that it's not going to be much of a breather. I feel pretty confident on that.
Yeah, I believe so also. I know that you do not have a crystal ball, but where do you see uranium spot price, let's say in 1 year from now?
Oh, a year. Yeah, I got asked this a bunch of times. And it was like, you change it, of course, every time, because if you had asked me in the spring, I actually said 75 when we were at $50. And then the summer came along, we hadn't moved too much. So then I probably would have revised it down. And then when you asked me last week when we were at 72, then it's like, oh, end of the year, probably going to be well into the 80s. But if you're going to say something a year from now, low 80s, say $85, and then you can hold me to it if you want to. But that's okay. Let's throw something out there anyway. So, but it's definitely a bunch of disclaimers attached to it. But I think everybody knows that.
Of course, fair enough. Per, do you see any bear scenario on the physical market except, God forbid, nuclear accident?
Yeah, I was in an investor conference in Brazil last week, and in every single meeting, I was like, we know the fundamentals. It looks too good to be true. Tell me about the bear scenarios. And you're almost sit there and it's like, you sound too much like a cheerleader. And we really try to take a realistic approach to this and just say like, hey, eyes wide open, clearly there's upside and downsides to everything, but it's so hard to find downsides, especially on the physical side. Now you can have a bigger downturn in general markets, like you've seen the last few days. It's blood red everywhere, and clearly that has a direct impact on equities, even on an equity like Sprott, who has no correlation to general markets. It's only related to the underlying spot price in uranium, which has held just fine and kept going up, but you still see a pretty big drop in equity prices. So that's when you can't decouple from those general markets. That's probably a bigger risk. Like if you have a forced sell-off because of a big downturn in general markets, but I don't think it's going to affect the physical much, unless you have some investors who have physical uranium wants to liquidate that in order to raise their cash. But yeah, it's hard to get a view on how big are those physical reserves that are sort of mobile, that sits with investors that could decide, I'm just going to take my profit at this point and put it somewhere else. Now, clearly the big funds like Yellowcake and Sprott won't do that, but sure, there are some investors who can do it, but I think those are fairly limited volumes anyway.
Yeah. Last question, non-uranium related. On what other commodities are you bullish, if you can name 3 or 4?
Other commodities. Oh, good one. Yeah, I'm so focused on uranium that it's. I mean, I guess enrichment doesn't count. But no, I would say, yeah, cobalt and copper maybe. That's. But again, I'm not an expert in this. Copper because of electrification, it just feels like you do need it. It's going to be everywhere. Cobalt seems like a good price point right now, but again, I'm not an expert on it. I think lithium in the long run, but I don't really know the lithium. I know there was a big run up and then it came back down. So I don't know exactly where we are in that cycle, but I think cobalt and copper, we'll say those two for now. So.
Okay, sorry, this is the last one. Future of SMRs.
Yeah, that's a very interesting one, and I would have been the one. I think I'm sure there is a recording of me saying like, "Oh, SMRs, I don't focus too much on that. It's 5-10 years out in time. We don't really have to worry about making an impact." And my real focus is on long-term operation of existing plants. Continue those lives as long as you can. It's the cheapest way to generate electricity you can ever find. If you have an existing reactor, extend it for 20 years. Buy a new turbine. Buy a couple of steam generators. Sure, they're not cheap, but it's a lot cheaper than building anything else new. But now you're actually starting to see SMRs. Like there was a tender for fuel for the SMR in Ontario a couple of weeks ago.
Yeah.
So the actual demand is hitting the market. Sure, it's not for delivery this year, but it's a few years out. So it's starting to show up when you have demand from traditional reactors too. And the numbers of SMRs, even the low case scenario for SMRs is very exciting. And if you go into you're gonna see this coal to nuclear, like where you take decommissioned or old coal power stations and just remove the boiler and put an SMR there instead. You have all the infrastructure in place, you have the skills, you have the workers, everything is there already. That's extremely exciting. And I think the US DOE, they identified 300 to 250 sites where they can do this, and that could double the nuclear capacity of the US. So the sky's the limit on SMRs. Development is happening very quickly. So it was interesting in the WNA fuel report. We saw SMRs for the first time actually in the demand profile, and I very confident 2 years from now that number will be a lot higher than it was in this past report. So a lot of exciting news on SMRs.
Yeah, I believe so also. Per, thank you very much for being my guest. That was a great chat, and I look forward to host you again sometime soon.
Thank you very much, Lucian. Anytime, just let me know when.
Thank you.